conversation. And maybe, sir, you have already introduced yourself, but what is the journey from being a director at Tech Mahindra and Dell to becoming a venture capitalist?
So I think I talked about that the desire to be an entrepreneur. I think I left it too late. Maybe I should have worked with corporates only for 10 years and then jumped to become a startup founder and investor now. But because I had continued to be an employee for 30 years, the desire was to become an investor. I think also the fact is that for all the years as a corporate employee, I was investing in Reliance, TCS, HDFC, right? The listed variety of stocks. So when in 2016 I started to invest and I wrote my first check, the realization that this is the same company that a Reliance was like 20, 30, 40 years ago, right? Or a TCS was, 50, 60 years ago, right? So, and the kind of exponential growth it can afford if you invest with the right founder, the right idea, the right team. I think, and so I wrote the first and the second check, and I didn't do anything much for 6 months. But I think the third, fourth, fifth check onwards, it just started to become really true and clear that this is the path I want to take. Because like I said, knowledge that you gain, who you work with, who you interact with, what you are able to influence, how it's a true test of whether you've learned anything in this life or not. All of that kind of comes together. So that was the journey essentially. It actually tests everything that I've learned in life so far. Every time I write, even the 151st check that I will write will test everything that I've learned till that day. So in the 7 years of investing, I'm not at the same place. How I wrote my first check to how I have written my 150th check is very, very different in terms of what I've done to get to that point of, yes, I want to invest with him or her, right?
Yeah, I think that's very much so. So in anything, I believe key first steps are the difficult, but once you go with those things and then it becomes easy and you understand more things and with practical experience. So as an investor and mentor with sector agnostic portfolios, so what motivated you to actually support startups across multiple geographies and domains?
So I think I started by investing in startups in India, and then at a point in time when we had to see what is the success, and I'm talking about 2016 and 17, most of the success stories are coming out of the US. That somebody put $1,000 and that has become $500 million, those kind of stories. So the idea was, why should I not diversify my risk and also invest in US-based startups? So that's where one learned that actually if you start to invest in Delaware-based C Corps, then those are not just US startups, but those are global startups. So there's another platform that makes it really easy, and that's the one that I used for at least 50 odd investments, which are predominantly US, but also global in nature, to invest in the global themes.
So could you share some examples of the startups you have invested in and the impact they have made in their respective industries and your experiences on those things and all?
Yeah, I think this is the most interesting question because I can say whatever I want. If I don't give you an example of why I invested in something and what became of that, okay? So my front runner in my portfolio is a company called unicoin.com. It was called Transparent Business earlier. They've changed their name to become unicoin.com. It's a founder who's a Russian guy who went to the US some 30 years ago and set up this company. He's called the Bill Gates from Russia. Okay, that's his name, right? So the secret of investment with him is in his name. And then the idea, from a remote workforce management company to a unicorn hunters show company to now launching a crypto coin, he's pivoted 3 times, okay? And all the time creating value, keeping in line with what's in the market, right? So that's my front runner. I invested at $140 million of valuation. I think at this point in time, the company is probably worth anything between $5 to $10 billion as we speak. So that's my top, All kudos to Alex Konanikan. That's the guy who's making it happen. I was just on the sidelines and I was able to see that this guy can do something. There's another one called Absolute. It used to be called Absolute Foods. It's a Gurgaon-based agri-tech company. I invested in that company at $10 million of valuation. Later on, Sequoia came and gave the company $100 million at a $500 million valuation. That was 2 years ago. So if he was to raise money today, I'm thinking he'll probably raise at more than $1 billion. It's a agri-tech company which has now become a biotechnology company. So they are doing the same thing that you probably have seen those Israeli videos that from thin air you can produce meat, right? So the chemical composition that is required to produce the skin it's natural skin, just that it was never actually on an animal, right? That's the kind of work, cutting edge technology work that they are doing. Apart from, of course, making sure that the agricultural input, precision farming, and the output is that entire supply chain is kept well, and they are exporting to some 20-25 countries. So that's the second investment. The third one, and that's actually a good example, is a company called Paymate. Now, Paymate is a fintech, payments platform. It's a pre-IPO stock, so they've actually filed for DHRP to go IPO. But I was not an investor into Paymate. I had invested in a company called Z2P. Z2P got acquired by Paymate at $30 million valuation. So, let me rephrase that. So, when Z2P was acquired by Paymate was at $30 million valuation. Right now, I think if they do the IPO, they will do it at above $1 billion, right? So, my company in which I had invested got acquired by a bigger company, and that company has grown 30x after that. So, that's my third company. There's a fourth and a fifth. There's a company called Novator. It's an edtech. Three very smart architects set up a company together. They went to Y Combinator. Y Combinator is the world's best accelerator program. I invested money at $7.5 million. He's raising his next round at possibly anywhere between $70 to $100 million as we speak. So 10x in 2.5, 3 years. There's SchoolNet, there is Qualio. There are so many names. I mean, 150 is a long list of. There's a company called Tech Eagle. Tech Eagle is a drone company. It's one of my favorites because I'm a PAVD certified pilot, and when you can't fly yourself, seeing a drone fly is another ambition fulfilled. That's what startups do, right? It makes you fulfill ambitions that you otherwise may not be able to do. So these are some of the examples. There are other side that things have not gone well. So to my mind, and maybe the questions are questions, but startup investing is not for everyone, right? If you're going to, first of all, if you're going to invest a small sum of money, and that's at least my strategy, and multiple startups, and if something goes to zero, then let it go to zero. Because here is the good thing about it, right? If you run a business, it doesn't stop at zero. When it goes down, it can take you down with you, right? It can go into negative as well. Here, at least, as an investor, your money, worst case is that it becomes zero. The best case is it can be 10x or 20x or 50x or 100x. So I have, I think, overall about 10 odd startups which are in the 20x plus range right now.
So I think that's good. Experience a lot. So, what's in your experience most common challenges that startup face during their early stages, especially, and how can they overcome them?
Yeah. So this is a question for startups, but I think it'll do the investing community well as well to understand that the early stage challenges, funding of course is the first challenge. Then gathering the right team, and Sahil talked about some of those teaming issues. Two founders, one not so passionate, but both holding 50%. That's a problem. I think the other problem is which startups take time to realize is that they need to have a good advisory board, right? So if you're in a particular business, you need someone who's a business specialist, somebody who's a marketing specialist, somebody who will be a corporate governance specialist. Those guys should be aligned with you so that even between the founders, if there is any temptation to do something wrong, okay, a lot of startups have failed in the recent past. We've heard the Go Mechanic story, the Trell story, There are so many other names, I don't want to take all the names, which have gone wrong on corporate governance issues, right? So if you have an advisory board who you are working with, who you are taking your problems to, I think it also rubs the other way, that they will not allow you to do anything wrong from a corporate governance standpoint. So these are some of the early challenges that I see startups facing, that they have to come out of. Of course, getting the product right, taking it to the market, all of those things need help as well. And that's where the accelerators come in. So a lot of accelerators are being set up right now, which become the first check, and then handhold the startup and the founders to get to a point where the seed can at least become a sapling and stand on its own.
So being an accredited mentor with accelerators in the US, Singapore and India, what are the key advantages that startups can gain from participating in such programs?
So again, I talked about acceleration being an important part of a startup's early life journey. You get the funding, you get the right mentorship, the right advisory, what kind of structure to set up, how much funds to raise, at what valuation to raise. Valuation, there was some discussion on valuation. Valuation is ultimately a function of demand and supply. Okay, if you put up a pitch deck and say, I want to raise 1 crore at 10 crore valuation, and you go to 20 investors and nobody's giving you money at 10, but some are indicating they'll be happy to give it at 5, then that's your valuation. Okay, so it's a question of demand and supply. I'm just answering this specifically the question. So test it out. The example of zombies in a room, that also is an example of demand and supply. When this one cell phone is working, everybody wants that. That's in demand, but there's only one running, right? And therefore the value is high. And in the other case, everybody's phone is working, only one is dead. So, So that's the answer on valuation. Sorry, did I answer your question completely or not yet?
Yeah, so it was how I could, as an
so the accelerators help with, So my innate desire to be in the startup ecosystem had first to do with being a productive member of the society till I die. Okay, there's no retirement age on being a startup investor. Okay, so that's one. Two, very clearly, I had a global outlook, and I wanted to understand from the best and then implement the best solutions into my own investments, right? So that's where the accelerators have come in. I mentor one Singapore-based accelerator, 2 US-based accelerators, and about a couple of them here in India. Now I'm setting up my own, the climate tech accelerator. I think all of that is support system, which I think today is an exception. I think going forward, most startups would start when the founders come together, they have an idea. The first thing they will do is go knock on an accelerator, even before taking friends and family money, to get set up right from the word go.
Yeah, and I think you've given a good word. So Chandigarh is generally called as a retirement city. Why? Because many of the employees, they have shifted and then they come to me and say, "After retire, I need something respectful to do and all." I think this becomes a good thing. With your experiences, they can share their experiences with other people and all, and they can help out those two also and I can. So that's the line I'm taking, which I'm saying, you never retire. Yep. So you can with coming into this field, and then you can never retire. You can, with your expansion thoughts and all, you can always go ahead. So maybe my next question is, with your expertise in mergers and acquisition, how can startups strategically approach M&A opportunities to drive their growth and expand their market presence? Yeah.
So I think as part of the exit, if data is to be believed, or if I'm just going to pull numbers out of thin air, only 1 in 500 will actually go and do an IPO. Okay, with the assumption that 250 of those will actually die. The balance will either trot along or get acquired, right? So acquisition is such an important part of a startup's journey. I've seen product companies when they start, and let's say they reach a $5 million or a $10 million kind of sale. Beyond that, growth, just as that single product company becomes very, very challenging. So what is the option? Either you become a full service company yourself, or you become part of a larger company that can take that product into their own and cross sell into your customers and take your product into their set of customers. So I think that's what the M&A is really about. It's about providing sustainability to a business which has been well set, but at some sense has reached the end of life of that scalability, that innovation, and therefore needs a fresh, needs to change the guard and play in a different field. And as we speak, M&A is happening left, right, and center. Companies are being acquired, companies are being merged. There are multiple transactions that I'm part of, and I'm seeing it every day. So that's the logical, end to a startup's journey, more logical than an IPO, which is kind of in some sense an outlier.
So, from your perspective, what are the emerging trends and technologies that will significantly shape the entrepreneurial landscape in India in the next 5 years?
So, from a technology standpoint, I think about 1 year ago, everybody got very excited about metaverse. Nobody's talking about it right now. The latest one is Chat GPT and artificial intelligence. I think this is here to stay. From a business standpoint, I see a lot of value in it. The drone economy is something that I'm very, very bullish on. The whole climate tech or clean tech is something I'm very, very bullish on. So the fact that there are going to be EVs and therefore the batteries need to be better than they've ever been before. I have an investment in a company called Log9, which is a revolutionary company in terms of just the battery research. So they are going beyond lithium-ion batteries. So some of these themes will really work, I think, in the coming days. And then there will be another theme that we will realize in 2024 that I can't predict right now, right? Because that's the very nature of the startup journey that, the future is getting unfolded or we only see the present, but the future is getting defined. The future is getting defined at a very rapid pace, right? The other thing that I will say is also, on the, for example, the agriculture side. Okay, there's so much innovation that I'm seeing right now in terms of how the crops are being irrigated versus how they are being fumigated versus how a farmer sitting at the farm can switch on a button on the mobile phone and the irrigation pump in the field, which is 2 kilometers away, can kick in. There are devices being made to check if there's any infestation in the crops. So I think there will be a lot of... so agri-tech is one of my favorite areas as well from a food sustainability standpoint.
So as a growth advisor for multiple startups, what strategy do you recommend for scaling a business sustainability while maintaining a profitability?
Yeah, I think... guys, is this interesting or am I speaking to myself?
So you have to be a bit louder.
Oh, that they have to manage. I mean, I'm kissing the microphone. What else am I supposed to do? Huh? Sorry, give me the question again.
Yeah, as a growth advisor for multiple startups, what strategies do you recommend for scaling a business sustainability while maintaining profitability?
Yeah, so profitability has become a word in the startup ecosystem in the last year and a half, right? Right around the time when Ukraine war started and VC funding became kind of difficult to get, profitability has come in. I think that's how the businesses should always have been. I'm still not 100% sure that every business has to be profitable from day one. That's not right. But every business to have visibility of profitability is really important. So at some point in time, and here's a favorite metric of mine, right? At some point in time, the amount of money that you raise, your annual turnover has to be higher than that. Okay, there's a lot of businesses that have been built over the last, especially between 2018 to 2021, where the amount of money raised was much higher than the annual revenues of the company, and the annual revenues never grew above that. Okay, and those companies died because profitability is the next step to after you've reached a certain set of revenues. So I think having visibility from a profitability standpoint is important, but having a clear line of sight on revenues, which should grow ahead of the amount of money that you're raising, is very important. And that's why investors today are very, very wary of people spending on digital marketing. A lot of e-commerce companies spend a lot of money on digital marketing. They acquired customers, but the customers went away to the next platform, even with a 5 rupee discount, right? And so there was no customer loyalty really in some of those cases. So some of those things have to be watched out for. That if you're investing in a business, it's got technology, it's got a team, it's got a product. It will therefore have revenues, and at some point in time will have profitability. That cannot be some wished away. It has to be visible in the next 2-3 years of running of the business.
So India has witnessed a boom in the startup ecosystem in recent years. So in your opinion, what factors have contributed to this growth, and how can it be sustained in the long run?
So US, India and China are the 3 front-running countries in terms of growth of the startup ecosystem. And it's actually an ecosystem because why it has happened for India is, first of all, India is the largest young country, right? So a lot of young people, a lot of requirement for jobs, a lot of educated people. Okay, that's the base, the demographic dividend as we call it. That's the starting point. But other than that, the fact that we have UPI, so ability to set up a business and not have to worry about how the payment will be done about this, has been taken care of. The fact that we have so much mobile penetration, right to the pan wala, rickshaw wala, everybody has a mobile phone, right? So the ability for a company to reach out to them has become phenomenal. So I think all of these plays coming together have contributed to India finding its place in the startup ecosystem, right behind the US and China.
So, given the dynamic nature of the business landscape, how important is adaptability and agility for startups? Can you share any examples where these qualities played a crucial role in startup success?
Yeah, I think I talked about Unicorn, adaptability and agility. When he started, it was at the back of COVID. Remote workforce management was the theme. As COVID lifted, he realized that I have to go on to create a Unicorn Hunter show where startups will get funded. They will be. It's a Unicorn Hunter show, for people who don't know, is what is a turbo version of Shark Tank, where millions of dollars are given to deserving companies. But when the VC winter happened, he pivoted to launching a coin. And as it's public news now, the copper mine, they purchased the hotel in Thailand. So it's an asset-backed coin, and he's trying to generate value. It's first of a kind product. So that's agility for me, right? That you can't control the market, but you can change your strategy, you can adapt in your journey to ensure that whatever the market does, you are 2 steps ahead. So that's one great example of adaptability. The other one, my second example, is the Absolute guys, right? They started with AgriTech to now have morphed into a biotechnology company where they are at the cutting edge of biotechnology, neck to neck with some of the best Israeli companies who are doing some great work in this space. The difference between the Israeli company and Indian company would be that we can do it at half or 1/3 the cost, and therefore we can always have an edge and probably supply to a much larger market than the Israelis ever would.
So, as an angel investor, what are the key criteria qualities you look for in startup before making an investment?
So I think Sahil, you laid out those criteria. For me, the founder or the founding team is the most important pillar. Okay, that's the most important pillar, followed by the idea. Okay, these are the 2 pillars, and I think the 3rd pillar is someone that I don't think anybody else talks about. That's my thing. It is that particular idea in that founder's hands. Okay, the combination. Okay. So I have an investment in a company called Scanbo. It's a Canada-based founder. It's an Indian founder, but he lives in Canada. He's a double PhD, and he's doing something in the diagnostics space The reason he's doing it is something that gelled with me very well. The other very important criteria, other than scalability, market, and all that, the 8 to 10 that Sahil talked about, is how much money has the founder put in himself, or how much money has the friends and family of founder put in, right? Because if that guy, that founder, cannot convince the friends and family to invest with him, why should I invest, right? Or if the founder has the ability to put in his own money, someone who's from a rich business family, first thing he's doing is coming to the investors to seek money. How much money have you put off on your own, right? These are some of the criteria one looks at, of course, the passion, the idea, the match, scalability, growth, that everybody will look at as well. But I also try and see, because in my experience of the businesses that have failed with me, 8 out of 10 have failed because of not the business or the environment. Because India is a growth country, yeah? So but there's really no reason, and technology can be made here at a very, can be made fairly cheaply, right? So it doesn't cost much. It has failed on integrity issues, right? Many of the businesses that have failed in my portfolio or I've seen around me have failed on integrity issues. So that's a big check for me. Somehow in my questions I try and figure out whether the guy, if he's given the money, is he going to treat it like his own money, or is he going to treat it like investor money, and be responsible with it, spend it wisely, and not cheat.
So maybe any cases you think maybe you invested in 150 startups, so in first 10-20 startups you invested and you learned maybe some lessons which need to be taken care of for further investments and all. Any one or two instances or suggestions?
So yeah, I mean, so because this is a big issue for me, that I'm happy to lose money because I made an unwise decision, or the market didn't support the founder's idea, but not when the startup himself or the founder himself has cheated. So one or two things, I normally don't give money to a single founder, right? I need two people to be part of the founding team who are not related to each other, who are not husband and wife, okay? So that comes from my banking background, right? We have a maker-checker concept, and we don't allow couples or siblings to work in the same department even in a bank, right? So that's the first check. And then the other one is, just the whole thing of upbringing, the founders give it away in the pitch session. They will when they pitch their idea, and when you quiz them on their product or how you got here or what you did. Somebody in a pitch session said that, by the way, I had to go to the government and bribe that guy to get this done. And I said, where did you get the money? Oh, no, that's my personal money that I put in. Well, I don't believe you, and I don't think it'll work that way. So there are some of those red flags that one is able to identify in those pitch sessions. You really want it to be a clean business, and to be able to stay on its merit, as opposed to what the founder can pull off outside the books.
So looking ahead, what do you envision for the future of entrepreneurship in India, and what opportunity do you foresee for aspiring entrepreneurs?
So I think growing up at my parents' age, there were like 3 or 4 jobs, right? You could go to the army, you could become a doctor or an engineer, or you could become a teacher, right? When I came around, there were a few more available. Okay, and then there were a few more, but jobs, right? In the last 20 years, what we've also seen is jobs is not just the only way. Businesses have found respect, okay? And being a startup founder, IITians are sometimes making a choice to do, or guys from IIM set up a startup as opposed to taking a 1 crore per annum kind of salary. They're refusing those options, right? So setting up a business of your own is a legitimate choice, and I see more and more youngsters will, use that as a way. My own belief, though, is that some of the like in the US, I see some of the founders are people who worked in corporates for at least 5 to 10 years before they jump to become founders. I would like to see some of that happen because I think with age comes maturity, and also the whole process, regimentation, being able to go to an office. But again, if you're God gifted and you have an idea, nothing's going to stop you from there. So I see entrepreneurship flourishing. Also with the growing population, the growing young age, if everybody wants to become an employee, who's going to give them the jobs, right? So setting up your own business is also, by that definition, the only real way of life that the younger generation will have. That's really my opinion.
So any maybe advice to ecosystem matters a lot. So like we have seen above NCR, Delhi and all, there are very less investments happening in startups and all, or maybe startups go outside the region and all. So what is maybe you would like to give advice to our investors over here? Who are first time investors, or maybe they think they should invest but then sometimes they अच्छा उसने नहीं किया तो कर लूँ या उसने किया तो कर लूँ या उसने नहीं किया तो मैं भी नहीं करता. So what do you think that advice or any thoughts on that?
So I think actually to begin with, if you're going to be a first time investor, co-investing is actually a great choice. Co-invest with someone that you trust, but also invest in a business that you yourself have understood. Okay, not just because a big name jumped into it, will you write a check, right? And also then, as Sahil talked about, understand the entire terminology, the process that you've gone through, what was the evaluation criteria, right? It's very simplistic, as Sahil was saying, that guy has 1 crore revenue and he got a multiplier of 10x, so therefore 10 crore is the valuation. I'm at 50 lakhs, I should be at 5 crores. No. Well, that was a simplistic way of drawing a conclusion, but that's not how the 10x was arrived at, right? 10x was arrived at considering multiple factors. So understanding of all of that has to become really clear in your head for you to get to a point where you will say, well, I don't care about anybody else. I like this idea and I'm going to be the first check. And there have been cases where I've been the first check. This company, Novator, that I talked about, I was actually the first check in that company. The company later went to Y Combinator. I was convinced about the 3 architects coming together and setting up a company. Although the architects were hearing from the market, you don't have a finance guy amongst you, you don't have a techie amongst you, so we need a CEO, CTO, and domain knowledge, all the boxes to be checked before we write a check. And then, of course, people who didn't write a check then are eating humble pie right now. So yeah, I mean, all I'll say is learn to play before you try and get solo. So co-investing to begin with is a great idea.
So maybe thank you for coming. I think I will love to have more sessions of you coming in. We people over here need more awareness sessions and all. And maybe any final suggestions or something, and then we can any thoughts, maybe queries, and maybe we'll take questions and answer first.
Yeah, I'm happy to take questions of the audience, but like I said, this is not for everyone, right? This is not for the faint-hearted. You have to very clearly know I'm going to meet a certain success rate, but believe this when I tell you, so Sahil gave an example of 10 startups. The one on top will give you 10x or more, right? So that will cover for your investment and the interest, the one on top. The balance 9, whatever happens, is really out of question. Some will go down to 0, some will, and actually not too many go down to 0. There is always some value to be salvaged. I've had 9 exits so far, okay? 9 exits so far, in which 4 have actually literally gone down to 0, but there are others which have been between 0.2x to 1x, and then there is one 4x, and then there is one 10x, and then there is one 1.2x. So net I'm still 2.5x on the 9 exit. But here is the good part about it. These startups will die early, okay? So the bad ones have died early, okay? The good ones who are sitting at 20x, 30x, 50x, they are still on my books. So it's a game of patience also. Actually, that tells me why, So if you invest in a Reliance or a TCS, every morning you get up, you have an opportunity to exit, right? You can exit your position. When you invest in a startup, you don't have that opportunity. For some people, it's a good thing. For me, it's a good thing. Okay. So as an aggressive guy, I think startup investing, by definition, forces me to commit for at least 5 years. Plan that way. I plan for 5. It may have to be 7, and in some cases, it has been 2. But plan for 5, and then let the compounding do the trick. Sometimes people confuse compounding with only interest rate related investment assets. Compounding is also on in equity, right? You've invested and you just said invested, and it compounds every day for you, right? So it's not for the faint-hearted. It's for people who have patience. It's for people who can spare that money. It's for people who can clearly identify the risk and then sit and wait for the results to come. That's how. I'm very clear. I wouldn't have made the kind of money I've made in my salaried life. No chance that the salary, even at a very, very respectable level, could have made this kind of money for me or given me this kind of life. So that was my way out. And I don't play real estate because real estate in India. Now this is slightly real estate in India involves bank transfers as well as bag transfers. I don't touch bags, so that's as an asset class doesn't work for me. So therefore, stocks, equity, startups is really where I'm focused on.
So, any questions from the audience?
So you were talking, am I audible?
Yes, you are.
So you were talking about Delaware-based. So we kind of established a company in Delaware over 2 months back. We are a India startup. Trying to grow. We are about 8 months old startup, and we opened a company in US. It's a C Corp. We have got all the whatever guidelines are there. I'm not aware of that. My partner is taking care of that. But we got everything done. Now the difficult part is we are trying to get some business also there. The difficult part is creating a bank account there with all the directors sitting here in India. So I just thought that you were talking about Delaware, so I just thought that it may be kind of a thing which you can help.
Yeah, I think there may be a requirement to have one of the guys based there, but maybe not. No, I'm not 100% sure whether that's a real requirement. But my point on Delaware was that Delaware has given me the opportunity to invest in not just Indian stocks, but stocks from Middle East, Latin America, Europe. The exact legality, I have people on my speed dial. I can check this out for you. I do think one director or one person who's a US resident is required, but also there may be a way to not have that requirement. A legal firm can help you with that, and I can provide you the name of that guy, no problem.
Yeah, any other question? Yeah, I mean.
Yeah, thank you. Actually, great to learn from your wisdom. So my 2 queries are like, from where did you get these startup, early stage startup? Is there any kind of platform or it is from within your network?
It's okay to share the platform names, right?
Yeah.
So look, I'll tell you, the first startup or the first 2 that I invested
First
in.
platform is Punjab Angels
The first 2 startups in 2016 I invested. I used to work for HSBC. We'd gone to Hyderabad. There's this place called T Hub in Hyderabad. Okay, so that's where I discovered the first 2. And once you write the checks, then there's a platform called Let's Venture in Bangalore. Out of Bangalore, there's a platform called Angel List. I just took his permission to talk about the platform. So there is Angel List that I do my US investments from, and then there is also IPV, VCATs. There's so many. So as your name goes to people and they start to tag you as an investor, there's enough inbound that comes in automatically. I don't think I have to go hunting for startups. I do events like these. I hope you didn't miss. I don't work for anyone. I don't really work. So part of my job is to go to events like these, right? I get so much interest from just the people who come in there, and then I have a methodology that I follow in terms of, send me your pitch deck, review it with me over a video chat, answer my questions, and then either I'm ready to write a check or help you get somebody else's money as well. So at this stage today, if you raise your hand, anyone who's going through any which way of wanting to find money will find a way to get to you. It was slightly tricky in 2014, 15, maybe 16. I think thereafter I've never had that problem.
Yes,
how do you keep a track of all your investments, like when to take the right or decisive things?
So I think interesting question. First of all, Excel has I don't know how many thousands of rows, right? So each investment of mine is one row on the Excel. Okay, so 150 is not even scratching the surface, right? That is, and so far as management goes. Okay, but the other answer is that a lot of my investments are through AIFs. Okay, so there are 4 AIFs that I'm part of. So what that does is that I have it is my shares. But the AIF is supposed to manage all the paperwork. So the paperwork doesn't come to me, right? There are, where I'm directly on the cap table as a shareholder, that's where I still need to do paperwork. So going through an AIF route actually is the best route. It's like saying buy mutual funds for shares as opposed to directly buying shares for someone who's going to start investing, right? Similarly, go via AIF as opposed to directly on the cap table. From an equity standpoint. That's insofar as managing is concerned. The other question about exit, my personal strategy is that I have to be thrown out. Okay, somebody has to say, Mandeep, here's the money, get out of our cap table. Otherwise, I don't want to exit. Okay, because I don't know why that is, but I got in this game to be the first investor in a Reliance, TCS, HDFC, Tesla, SpaceX, Microsoft equivalent company, right? That's what the game is about. So therefore, the cash that goes into a startup from an investment standpoint, when it comes on its own time. When definitely offered an exit, then I'm willing to take it. Otherwise, I mostly want to let it ride, because that's just me. I mean, everybody can have their own decision about it. In most cases, though, angel investors don't get that choice. Sometimes they have to go on to the next round, and many times in a round, everybody is asked to exit at 5x, 10x valuation, and then we come out like that. My 2 exits, which are at 10x and 4x, the syndicate decided that we'll be out, and I was perfectly okay with that.
But at certain point of time, you might have seen like this company is not working with this startup, not working for others. So is there any kind of strategy like you want to exit from that?
No, hang on. So see, that is no. So this is what you do in a listed stock, okay? What you just said is exactly what you do in a listed stock. You have nothing else in your hand other than when will I enter Reliance and when will I exit Reliance, right? You can do day trading also in that, right? In a startup, for you to say that startup is not doing well, and if you're an investor, figure out why it's not doing well. I mean, that's what I do. I will talk to the founder. What does he need? Is it that the sales is not picking up? I have connections and I can help him on the sales side, right? Is it because he's spending too much money on technology and still the technology is not good? I have people who can help him with technology, right? So that's the whole purpose of it. But if it is going down because he's siphoning money out, either I'll file a criminal case against him or I'll just say thank you and I don't want to spend another minute on you, right? To be able to influence the outcome is the reason that you want to participate in startup, and you don't have to do it for all. I'm not saying I'm responsible for all 150, but the 10 or 20 that I've chosen to become an advisor for is where I'm guiding their journey. Okay, there are other people, other investors relying on me to guide that journey. Okay, as I'm relying on other investors in the case of some of the others where I'm not in regular touch with the founders, and especially some of my foreign investments.
Thank you so much. There's so many queries, but time is too short. Thank you.
So we connect you one to one also. Maybe if somebody wishes to, we can
Yeah,
also Zoom
absolutely,
or
absolutely.
maybe anything at all.
And Saji will also circulate a form right now. In case you are interested, you can also fill the form, the investor interest form. If you just circulate a link.
So if anybody wishes to become an investor or they want to learn more how things happen, and like Amit ji said, they want to have point है कि जो आपने रसगुल्ला कहाँ से अच्छी डील जाती है उसका पहले टाइम भी निकालना पड़ता है डील्स देखने के लिए क्योंकि आउट ऑफ 100 डील्स you'll invest maybe in 2 or 5 but you have to see 100 तो उसके लिए पहले 100 डील देखने के लिए टाइम भी होना चाहिए so accordingly your ticket size which minimum ticket size or maximum ticket size तभी जो application form है maybe they are saying so we have those columns कि आपका ticket size क्या है interest क्या है चीजें क्या है so that we can help you with those like minded you want तो इसलिए जो फॉर्म भर भी रहे हैं वो ट्रू सेंस में भरे ये नहीं सबको टिक कर दिया तो सबको टिक कर दोगे तो फिर हमें सेंस नहीं हो पाएगा कि which are your interest है ना so maybe we'll wrap up the session yeah
Thank you very much.